If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. After a successful week of trades with this previous double bottom over here meeting its target, Kaspa has sort of chilled out. We really need this sleeping giant to wake up in order to get to these technical targets. Right now, we have seen over the past, this week, that on Monday, we broke the neckline of an even larger double bottom. However, very soon after, we came crashing back down below and have confirmed it as resistance on Tuesday. Now, what I would say is that we validated the pattern, which means we should see the 17.5 cent technical target. Unfortunately, as you have a throwback underneath the neckline, we would say that for now, we shouldn't be expecting this target. We're now in the immediate short term going to go down and hopefully can confirm key levels of support, just as some bullish retests of those levels for further continuation eventually higher. So what are those levels? We're going to run through all of it today. The key levels that must be maintained in order to get this sleeping giant waking up again. So stay tuned, like, subscribe, comment and share so we can hit 7.5k before the end of this year. And if you want to get educated by myself, use the links down below. Head to the website, head to the Twitter for more information, and at the end of this video you'll find out more about that. So what I would usually say is, we're expecting immediate short-term downside now that we validated the pattern and went ahead and invalidated it by confirming it as resistance with this shooting star Japanese candlestick pattern. And what I would then look at is the golden pocket, the levels of. So we can see that the 0.5 here is the lowest support of the golden pocket. And so going forward, really and truly, we need to see that being maintained because we have created the reversal wave when we broke through the golden pocket as well as the neckline of the double bottom. What is interesting to me is that we rejected the 786, and as you can see to the left, it was the highest body candle close of our range. So that's why it's making sense that this is a key level of resistance going forward. And then you can also use this as a new neckline for a new double bottom, which would actually take us to much higher price targets than this 17.5 cent technical target out of the smaller double bottom. So it's quite funny because if you remember from Monday the 27th, so a couple weeks back, we were calling for this potential EMA repair. Well, we were calling for it. It looked like it was going to happen. So we were calling it, and we were at a key level of support. And at this key level, which was on another golden pocket, measuring this wave up, finding about the halfway point, we came down to the halfway point. This is where we're looking for entries for buy trades, and we saw the bullish pattern forming. We saw multiple Japanese candlestick patterns, bullish engulfing here, another bullish engulfing here, and also the other indication to me for a reason why we would have pumped to this level and meet the technical, afterwards the pattern had formed, but the reason why we believe we would at least get into the golden pocket is simply because the EMA repel. If we see this double bottom on a key level, the Fibonacci level, and we're not seeing a bearish cross, it's likely that we pump back above and confirm that support. This is when I then called for this other double bottom from last week, and we saw the breakout target finally getting met, and this is where we have reversed from. So that makes sense, everyone, because usually when we meet a pattern's target, we tend to reverse. So the next thing to expect is returning to those key levels. So we're looking at the moving averages and the 0.5 Fibonacci. So to hold up this reversal wave, I would suggest we do not want to lose the 0.5 Fib. And there's a candle right there with a wick holding it as support. And then I'd say that that's the lowest wick right there, 13.29 cents. So going forward, we need to maintain above that price point in order to get that reversal wave continuation, which would take us to not only 17.5 cents, but let's check out what the technical target out of this other double bottom would be once this neckline is broken. So I'm going to put it there, and we can see this is actually going to take us to the 1618 target at 18 cents. So quite exciting because from today's current price, this would be a move of about 40% to the technical target or just beneath that point. But we can see that if we continue to maintain above the golden pocket, even after meeting those key Fibonacci levels. So let's just pretend that it's had a move up like this. You just need to continue to maintain that low. So you could come down back all the way to here and you still continue all the way up to our technical target, the 2414 fib, 23.5 cents. So that's why I've been just saying 25 cents in the past few weeks. So Now, what I also need to do is show you a new set of fibs going from this low to this high. And it's going to show quite different levels compared to the other Fibonacci. So we'll get rid of the bullish targets for now and that opposite golden pocket. And previously, we were saying that 0.5 was down over here, but now with this new Fibonacci golden pocket, we can see that the 0.5 is slightly higher, exactly on that body candle close instead of that wick. And we've also got the 618 and the 65 down here on this previous small double bottom neckline right over here at 13 cents. So nice psychological level. So what I'm going to do is draw a support from that wick to that 0.65 Fibonacci. Maybe I'll include that double bottom there. And so going forward, if I now bring back the other Fibonacci that we previously had, I've marked out the level that we know needs to hold going forward. So even if we do lose the moving averages, we would then say we're coming down to the 200 EMA. But there's a lot of supports within the way that might not take price all the way back down to that. The key level that I've drawn just now between 13 and 13.33 cents is the level that needs to hold going forward just to get this continuation. So essentially, yes, we would say when the reversal wave is created, you don't want to lose the 0.5, but for the reasons explained in today's update with the other Fibonacci golden pocket, we know that 13-cent psychological level just needs to hold for the continuation to those higher up targets. Thank you so much for tuning in today. Don't forget to like, subscribe, comment, share, and let me know what your thoughts are on this market, whether it will lose this and invalidate those targets, or do you believe we will actually continue to them. Okay, that's it from me today. If you want to take action on the education, I will play a little clip right now, but use the links down below. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website, you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers. If you want to learn how to trade just like me, join the community. Click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free.